Jerome Powell. Oh man, so Jerome Powell's testimony, day 2 after Powell comes out extremely hawkish on day 1, holding back no punches he threw. The market's down yesterday. Will he do the same again? We've also got some important macro updates as well. Thank you for joining me for this live stream. Don't forget to smash up likes. Don't forget to subscribe. As always, check out the links in the description because that supports the channel. Guys, look at this. Bitcoin down another % today, sitting at important support around this 22,000 level mark. We're going to have Jerome Powell speaking any minute now. We will be switching over to that. We've just here, you can see now, literally live as we're speaking, guys, we've just got the JOLTS figure coming in there. You can see they're coming in at 10.82. If we head on over, that's a little bit hotter than we were expecting, okay? You're expecting this to come in at 10.5. We also had the ADP jobs figure come out a few hours ago. That came in hot as well. 242,000 new jobs versus the expected 205,000 new jobs. And they revised January up. So things aren't looking great here. I mean, if I show you that visually as well, let's just head up to here, click on ADP employment change, and you will see that's 242. Big skyscraper there on the private payroll. Remember, that's a precursor to what we're going to see on Friday for the non-farm payroll. So labor market's looking tight. People are now worried that Jerome Powell is going to have to get heavy with his rate hikes. Look at this. Yesterday, we got a big flip-flop. Now 70% of the market. Remember, we were watching this when it was 10%. 15% of the market was just pricing in 50 base points. Now 70% of the market, the majority of the market, strongly are expecting Powell to do 50 base points. And all the data so far is pointing in that direction. More strong jobs data. We just got the jobs literally just coming now, which I'm showing you there on screen. That's showing hot. Seeing the ADP jobs figure, that's hot. Okay, we get the non-farm payrolls on Friday. If that's hot as well, and then CPI on the 14th, this could be a mess, right? This could mean 50 basis points, and it means Jerome Powell's having to be stop-start. Let's see who we got in the chat, guys. We got Ian in the chat. Justin, good to see you. Gustavo, Brandon, Shoaib, good to see you guys. Don't forget to smash up the likes. We will switch over to Jerome Powell. As soon as I see him go live, I will make sure we turn on the volume there and listen in on that as well. Had an interesting little comment there by Ian who quoted me actually what I said in December 2022. I expect Q1 2023 and probably Q2 to be very volatile. You need to be ready and prepare your mindset so you don't get rattled. I mean, I stand by that, guys. I've said that throughout. Expect Q1, Q2 to be very juddery, right? Really volatile, can be sickening at times. You think you're going to go, you think the light's green, and then boom, back again into red, and then green, and then red. Like that's the market right now, and it's painful. If you look at an important metric I do want to share with you, it's this. It's known as the 5-year forward inflation expectation. In simple terms, it's what does the market expect inflation to be? This is important because inflation is a bit of a self-fulfilling prophecy. If people think inflation is going to be high, i.e. prices are going to be high, they oftentimes delay their purchases, right? So this is a self-fulfilling prophecy. So if you take a look at this, we were sitting here at 2.31. As soon as Jerome Powell spoke, he notched us all the way down here to 2.22. Okay, so he's done a good job of notching this back down. And again, he's going to want it to get back to the 2s and even down towards the 1.6 level. If I zoom out here, you can look into March. At this period, you're 196. But if I increase the scale here, so we can go back a couple of years as well, you will see that when the pandemic started, you're around during the pandemic, you're 1.2. Really, he wants this to be at around 1.6 to 1.8 mark. He's going to want to bring that inflation expectation down, which is why he's coming out guns blazing and swinging. Now, it's also not good because the Fed has lost credibility, right? The fact that he's having to do such a big pivot, such a big yo-yo, is not going to hold itself good for the market. The markets are going to start losing trust. And if he does, that then goes back to the Paul Volcker times where the Fed chairman Paul Volcker was really struggling and you had entrenched inflation for years. This is what markets are worried about, okay? Let's see what you guys are saying in the chat. Let me know how you guys are feeling about the market. Oh, Omar says, oh man. John Douglas says, hey. Brandon says, smash those likes. Absolutely, do smash the likes. By the way, guys, I was at Binance HQ yesterday. If you haven't seen that video, go watch my video from yesterday. But I've got some really important merch for you guys. So I will be doing giveaways on a bunch of this stuff. So make sure you subscribe. We've got a bunch of Binance bags. We've got all sorts, guys. We've got caps. Got some caps for you guys. Definitely check this out. We've got t-shirts. Let's see what we've got here. We've got the Ronaldo NFT t-shirts. We've got the Binance Fade t-shirts. So we'll be giving these away, guys. We will be giving these away. So make sure you stay tuned. Make sure you subscribe. Make sure you're engaging in the community so I can give back to you. So I went over to the London HQ for Binance and I'll be getting that over to you guys. Cool. All right, so still no Jerome Powell yet. I will switch over to him as soon as he does jump on. It's been 5 minutes since his scheduled time. Johnny Gucci, boys and girls, let's make some money. Died, hello everyone. Banshee, good to see you. Jason, good to see you as well. Cool. Okay, so let's now jump onto the charts because we need to talk about Bitcoin. Bitcoin here. What is critical here? We cannot form a lower low. Okay, you've got this bit of a diagonal double top pattern. You do not want to be falling lower than this doji candle, which rotated at 21,366 precisely. Okay, so that's the level we need to be watching here on Bitcoin. You do not want to fall below here. We can still rotate now. I mean, it's not too late. If Bitcoin can bounce off 22, this is important horizontal support. If I bring out the Bollinger Band, you will see we're coming to the bottom of our Bollinger Band. That can act as support as well, and then we can start working our way back up. Now, the problem we're going to have is the macro data is not helping us. Okay, so it's all good your TA showing you a pattern. If the macro is not helping you, I'm expecting a pullback. And so when you look at this on a wider time frame and you bring out the daily EMA ribbon, you see we've lost our daily EMA ribbon. Not good. And now we need to then switch it up to the weekly to say what is going on here. And it looks like we're getting a test from the top of this channel. Let me get a big, thick highlighter. See this channel here, guys? We were in this channel, right? Bottom is 18,700, top is 22,000. So now what we're seeing here is we had our relief rally into EMA ribbon, rejected by EMA ribbon. Now we need to show, is 22 strong enough that we can go and reclaim our weekly EMA ribbon? Or was this just a relief rally and the bears are going to show strength and come all the way down? Now, it's not actually the end of the world if we need to come back to 20. So that same situation can also be done from 20. If we can't bounce at 22 and we need to take some more pain, it can come to 22 and we can rotate from there. It's going to be a little bit harder for us to do that and work our way to the upside as well. Okay, so the bears have shown 3 good weeks here along the EMA ribbon rejecting us. The macroeconomic data is showing that Jerome Powell's battle against inflation is not as straightforward as he thought. And that is why we're starting to see some pain. Let's also take a look at the dollar index, which is also a very important culprit. Remember, I said, keep watching this, guys, the dollar index, and look what it's gone and done. It's reclaiming its weekly EMA ribbon. This is not a mean feat, guys. For this many weeks here, we were keeping this thing in the trenches, right? 14 weeks to the downside in a nice downtrend. And over the last kind of 5-6 weeks here, it's been gaining some traction as the negative data started coming out in January. Now, what we were hoping for was that 4 candles like this were negative, and then the February data would come out positive and send the dollar index back to the downside again. But so far, it's not looking good. So far, the Feb data is showing that it's backing up what January was saying, in that inflation could be back on the rise again, and Jerome Powell and the Fed haven't quite got it right, okay? Hopefully that makes sense, guys. Let me know if it doesn't, we can go into that a little bit more. US 10-year, also again, inversely correlated to crypto, is showing that it's going for another run. This now spiked up above 4%, just sitting just shy of that right now at 3.92. But again, you do not want this going back to the highs here at 4.3, because that's going to be worrying for the markets. Again, inversely correlated to crypto. This shows that risk is rotating off again. We want it to be on, okay? That's what we want for crypto. Now, personally, what am I looking to do? Well, I'm looking for opportunities to buy the dip, right? I want to be buying the dip. I want to be taking opportunities to add to my bag, but I won't be doing so just yet. When we're in this kind of a situation, I just want to wait to see where is support going to come in. If it doesn't come in at 22, I'm expecting 20, okay? So I'd much rather be buying at 20 than 22. Let's now see, I'm seeing some activity here on the testimony. Let's see what we've got over here at Capitol Hill in the States. Let's just switch on the audio for you guys.
Let's expect to see today, given how much repricing we have already seen next. Nancy Curtin, Global Chief Investment Officer at Alti, joins us. This is Bloomberg.
Has made major progress to improve economic conditions, including adding a record 12 million jobs, reducing unemployment to its lowest rate in 54 years, while...
Okay, guess not, guys. Guess he's not quite ready yet, Jerome Powell. So we will crack on. When I see him, I will bring him on the live stream. Hopefully he doesn't say too much, right? He said enough yesterday. We don't need to crash the market anymore. But the other thing we need to talk about is it's not just macroeconomic issues we're facing in crypto. There's specific crypto issues as well. We spoke about Operation Choke Point. We know that US regulators are really going after crypto. They started 2023 strongly after crypto. They're trying to squeeze the liquidity, stop your on-ramps. And that's proving quite challenging, right? We saw the collapse with Silvergate, and this means people are finding it difficult in certain jurisdictions to get their money onto exchanges and to make purchases. And that's a very smart way for the US to try to clamp down. But one thing I know for sure is I've seen crypto face big issues before, right? Whether it's Mt. Gox, whether it's various other issues, we've seen it deal with this and show strength. And it's where you see these peak FUD moments that I personally want to be buying. When I see those prices falling, when I see people calling crypto a scam, when I see everybody saying it's going to fail, that's where I want to be loading in my positions. Okay, guys, also, don't forget to check out BYBIT. Link is in the description. They have introduced their copy trading feature, guys. Very good feature, guys. If you guys don't have time, or you're not a good trader, or you feel like you don't want to trade, why not jump on and copy the trading of a professional, right? If I had time, I would definitely be a copy trader. These guys here, look at this. Apple Trading has delivered ROI over the last 90 days of 157%, right? 7 days, he's made 50% for everybody. You just click copy, you tell how much funds you want to allocate, like $100, $1,000, whatever you want to allocate, and it will just copy their trades. It will copy their trades, and you know they've got a proven track record over the last 3 months of it delivering 160%. You can choose whichever one you like, right? Based on their performance, based on their track record, you can go here, you can click on this section here and say traders with the highest profit. Definitely go check that out. Links in the description to BYBIT. If you use my link, you do get some of the best trading fees available, 0% on spot. You also get $30,000 in bonuses, depending on how much you deposit. So you hit certain criteria and you get bonuses based on how much you deposit. But definitely the copy trading feature is definitely quite a cool one. So check that out. Link is in the description. And you've also got my TA course completely free, ijaz.uk/TA. And speaking of free stuff, while we're at it, there's PDFs in the description. I noticed a lot of you aren't clicking those. There's 2 PDFs. One is a fundamental analysis cheat guide, which I put together, an ebook, which I put for free. Go read it. There's also a chart pattern cheat sheet. So head and shoulders pattern, all these patterns, I've put them into a cheat sheet with the ones I think convert the best. So definitely download those completely free and keep those on your desktop, print them out, keep them on your desk. Really useful when you're doing TA. Still no signs of Jerome Powell, incidentally. So why don't we go on and take a look at what else we have this week, because it's not a joke. This week is a serious week. If you take a look at where we're at, we are here, okay? We've got Jerome Powell speaking right now. We've just had the jobs report come in bad. We then get the Fed's beige book. Less market moving, but we'll take a look at it when it comes out as well. And then on Friday, you get your non-farm payrolls, okay? So on Friday, you get your non-farm payrolls. Really important macro week. Don't forget, on top of that, you got the Mt. Gox FUD. I personally think the Mt. Gox stuff has been overplayed. I think a lot of people are worrying unnecessarily, for the Mt. Gox drama. So definitely go check out my videos earlier in the week where I discussed Mt. Gox. For the Shanghai upgrade, I've got a video on that as well, so go watch that so you're all caught up. Cool. I think that's everything. Let's see what you guys are saying in the comments. Study says, what levels we looking at? Just shared that. If you scroll back, you will see that. Johnny Gucci, hello, boys and girls. Let's make some money. Absolutely. I think we covered that comment. Raghav says, are you bullish? No, not super bullish right now. This data is not looking good. What Jerome Powell said yesterday, keeping in mind he has access to more data than we do, is not good, right? It's not good what he's saying. He's basically saying we've got it wrong. He was out here putting it down to 25 basis points, saying, oh, the disinflationary process has started, we're on top of things. Markets got excited thinking he was on top of things, and now he's coming out saying, oh, I've not taken 50 basis points off the agenda. Like, he's literally smacked his own credibility, and that's not a good sign. Like, I'm all for being bullish when the data is suggesting to be so, but when I see a Fed official making such a fundamental mistake, that gets me worried that he doesn't know what he's talking about and he's not in control of this inflation. Bitcoin going to 20K. I think 20K is really realistic, guys. I think that's a nice level. Like I just said, I personally don't want to buy at 22. I don't think it's as exciting as a purchase. I think 20K could be a nice nibble. Now, obviously, there's a risk, right? If we never see 20K, then you don't get to nibble. But I've been throughout this bear market nibbling. So I'm not desperate to be nibbling at 22 when I was buying at 15,500. I'm happy with my portfolio. I don't need to be chasing. Now, if you haven't built your portfolio yet, that's a different question. Does it really matter whether you're at 22, 21.5, 20K in the long run if you want to hold for multiple years? Probably not. If you're trading, of course, it makes a lot bigger difference. London City Randomizer. That's my city, buddy. Smashing the likes. Appreciate you, buddy. Market rallying. Yep, let's also get up the short time frames and keep this open here so you guys can see this. I'll keep it up on the 5-minute chart so you guys can see how the market's feeling as Jerome Powell gets set for testimony. So Bitcoin's moving. but the S&P is not having it just yet. When does it start? It's supposed to start at 3, but they never tell you exactly when Jerome Powell's going to speak. So you've got all the other senators speaking, so I'm saving you the pain of that. When I hear that Jerome Powell is speaking, I will switch over to Jerome Powell. I've got it open here on my other monitor, and I'll switch it across when we have that. In the meantime, we can take some questions. If you have any coins to look at or anything else, we can cover those off. Just want to see, does Jerome Powell say anything meaningful that crashes the market? Yesterday he did. Will he do it again? That's going to be the question today. Ian, what's up, fellas? Stadia says Bitcoin is green. Yes, Wacaz, good to see you. Eric, good to see you. Cryptostopia says Gareth Soloway saying Bitcoin going to 9K. He has some interesting points. Yes, but 9K. I mean, look, you guys are smart enough, if you're in my community here, to understand when people are just being sensationalist for the sake of being sensationalist, right? It gets views, it gets clicks, it gets notoriety, which probably why more people know his name than they will know mine. That's absolutely fine. Like you can make statements like that, but you saw with, for example, Crypto Capo, who kept saying the same thing, hammer time. Like, you missed out on that rally. I'd rather be in the market when I need to be in the market and be wary. Like, why would I sit out from a move from 15,500 all the way up here to the top of this candlestick at 25,200? Why would I sit out on that? Am I silly? Right? And then I'll be ready to buy the dips and more, right? That's what it's about for me. I don't need to be a perma bear, because what's going to happen is, let's say you go through this process, right? Someone like Crypto Capo, who's a perma bear, will stay quiet and be like, "Oh, it's okay, it's gonna come down," and then it'll come down and they'll be like, "I told you so, and then the bulls will say it's gonna go up, and then the bulls will go say, "I told you so." Like, it's just childish. Like, you just need to be in the market. You want to take advantage of moves like this. You want to be wary of dumps and get ready to be buying the dips. Simple. Ignore those moon boys. Ignore all those FUD spreaders. Johnny Gucci wants me to take a look at Ethereum. Okay, so Ethereum's an interesting one as well. So if we take a look at the Ethereum charts, it's been a little while here since we've kind of taken a look at the ETH chart. And again, rejected by our weekly EMA ribbon, coming down. I'm looking for levels around 1400. Maybe we don't get it, but 1400 would be a nice opportunity for me to add some more. And again, if we fall to the top of the channel at 1269, that would be nice and juicy. Again, maybe wishful thinking, but if inflation shows that's out of control, I wouldn't be surprised if we start coming to these levels. If Jerome Powell starts having to do 50 basis points, right? If he does 50 basis points on March the 22nd, well, let's go back a step. If we get bad non-farm payrolls on Friday, if we get bad CPI read on next Tuesday the 14th, I believe it is. Yep, CPI. And then on the 22nd, we get the FOMC meeting. Do not be surprised to see these markets fall quite painfully, right? Do not be surprised to see us come to these kind of levels. Ian goes, keep the comments cleanish, fellas. Ijaz is a God-fearing Muslim. He doesn't want degeneracy in the comments. Yeah, no room for degeneracy, guys. Let's just educate each other, learn, navigate this crypto space like adults. Adults. There are plenty of other channels for you to be childish. Gareth is nuts. He's married to his prediction. Yeah, thanks. Let's go. Question, what's your favorite project to nibble in 2023? Interesting question. I think, so I've made my views quite clear on the kind of plays I'm expected to do really well in 2023. But right now, you've got to understand that 2023 is going to be a year of volatility. So in a year of volatility, you ultimately want to make sure you're eating your veg. And so I never want to neglect the fact that this year, if you did nothing else but try to on the dips buy Bitcoin and Ethereum, you would have had a good year. Right? And that's even if you're watching crypto every single day, you're really invested in the market, like that's what's going to be stable. That's the anchor of your portfolio. Now, there's no guarantees that anything beyond that is going to be a safe purchase, right? Layer 1 solutions, layer 2 solutions, they'll do fantastic when the market decides to run. But when is this market going to decide to run? When we first thought inflation was under control, we were thinking, okay, maybe late Q3, maybe Q4, market can start sorting itself out and show some improvement. But now that Jerome Powell just shown that he's kind of unable to control this beast that is inflation, that's going to cause some more problems, right? A couple of weeks ago, we're sitting here going, how is Jerome Powell doing this? Is he managing to do a soft landing? But now we're realizing, nah, he's not as cool as he looks. He's kind of sweating it, and he's not too sure, right? He's 1 foot in, 1 foot out, 1 foot in, 1 foot out. It's not as quite as calm and collected as he thought. So to answer your question, Bitcoin and ETH is probably going to be the best bets for a volatile year. But once the market does rotate, my view is layer 1 solutions, layer 2 solutions, and looking at those as key plays. And then I'll be looking at things like narratives such as decentralization. I still think the decentralization narrative will be important as well. Still not sure why Jerome Powell is not on, guys. 20 minutes in here, and Jerome Powell still isn't live. If you guys can see him live anywhere, let me know. But Bloomberg are not. They've not switched over to him, even though they said they would. Maybe he's not speaking just yet. Do you think we can come back and test our base of around 15,500? So my view on this 15,500 level is I think it's going to be very, very difficult, but not impossible, right? Some people are saying it's impossible that we're going to go down to 15,500. I wouldn't say that, but it's going to take a very specific set of events to happen. So if you imagine when we were coming down to these 15,500, imagine the situation with one set. Let's just switch over. Let's see what we got here from these lot.
Market, and also the sustainability of Americans being able to afford houses and mortgages with these kind of interest rates. So you can expect a lot of what we saw yesterday, and really this is the tension the Fed has right now, of course, when it comes to trying to bring down inflation, but also make sure they keep a labor market intact. But it'll be maybe a little bit even more political, given some of the characters in the room.
Ira, given that, do you think the market's already heard the message and today won't add to much? What are you expecting?
Yeah, it's a little bit more difficult. You know, the House of Representatives tends to have a much broader and sometimes somewhat more contentious questioning of the Fed chair. So I think you'll hear, more questioning about whether or not there's going to be job losses because of what the Federal Reserve's done, and if the Federal Reserve is actually trying to hurt households by increasing the unemployment rate. But I think Jay Powell will stay on message. I think the important information that we received yesterday was that that Powell thinks that that they're going to have to be more.
Just going to check another channel. Let's see if he's live on a different platform. Bloomberg does switch over to him. But I'm seeing some of you in the comments saying he could be live on another channel. Let's see if I can switch over to Fox Business. Not seeing him just yet. If you guys drop me a link, if you're seeing him live. I'm not seeing him live just yet. They're still not switching over to him.
Than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If, and I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell. I'll now recognize myself for 5 minutes for the purposes of questioning. Chairman Powell, there's been a lot of discussion over the last 24 hours about the effect of rate increases on the economy. A lot of debate about what you said yesterday in the Senate. How But no one asked you this directly. We have a March meeting coming up, Open Markets Committee meeting coming up in 2 weeks. How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which, of course, I haven't seen, being sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So those will be important, and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy and of our progress in bringing inflation down. And we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher longer. Is that still the case?
Yes. So, as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
What are those economic factors?
So, going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. And as I pointed out, some of that may have been affected by the very warm January weather, but nonetheless, all of it pointed in the same direction.
Okay, let's move to regulation. Chair Powell, in January, the Federal Reserve put out a policy statement noting that digital asset custody is a permissible activity if done in a safe and sound manner. However, if a bank can demonstrate to the Fed that it can conduct that activity in a safe and sound manner, the capital impact of the SEC's staff accounting bulletin effectively precludes banks from offering digital asset custody service at any scale. Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
I am aware of it. Of course, it's an SEC accounting bulletin. This is SAB 121, I think. And
that's right.
I'm certainly aware of it, and we do follow generally accepted accounting principles in our capital regulation. Okay.
Well, without objection, I'll submit to the submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards. You got questions about this yesterday. Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process. And previous statements by members of the Fed governors about the adequacy of current capital standards. And so while the Vice Chair for Supervision has announced that the Fed will engage in a holistic review of capital regulation, is that Fed staff? Is that done at the at the governor's, the board level? What is the process? There are a lot of questions that people have about his statements. And so we want to understand why it's necessary for the Fed to conduct a holistic review and what that process is. So, my general question is, do you still agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of at this point?
Thank you. So the why really just is that as a new Vice Chair for Supervision, Vice Chair Barr has launched into, he's taking a fresh look at everything, including capital. That actually is typical of the last two people to have this job. So that makes a lot of sense. In terms of the process, it's certainly conducted under Vice Chair Barr's leadership with input from the staff and discussions with governors on that committee. And I'm kept broadly apprised about what's going on. But the bottom line is nothing has been Nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal, and that proposal will go out for comment, and we'll solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a wide open process in the sunshine.
Thank you. I yield back. Now recognize the gentlewoman from California, the ranking member, Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on February 1st, that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why I find it very concerning that your recommendation to raise the debt limit in a timely manner is being ignored by my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch Ratings said this week they may seriously look at downgrading the U.S. debt based on the escalating brinksmanship they are observing, even if Congress ultimately addresses the debt limit at the last minute. This is history repeating itself. Standard & Poor's downgraded our debt back in 2011 when Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion.
Seeing some good strength there, guys, actually. So if you're looking at Bitcoin now, 22,145, so it's coming off that 22,000 mark. It's an important level at the top of our channel, remember. So as long as Jerome Powell doesn't say anything silly, hopefully that's enough is enough, and we can start working our way, but you're never sure with Jerome Powell.
Credit initiative, or to provide hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office. 3 times they addressed the debt ceiling in a timely manner without holding our country hostage. But Republicans are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start briefly by saying that we have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the 2 things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here. But no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Thank you very much. I don't want to miss what you said. I somewhat quoted you when you said that Congress must raise the debt limit because of what you described as a highly risky consequence of failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again, these are fiscal discussions, and we don't want to be a part of them, and really they're between elected officials.
But you are an expert on the subject.
Well, I spent a lot of time on this, as you'll recall.
As an expert on this subject, you are concerned about the high risky consequence of failing to do so. Is that correct? Did I correctly quote you?
That's correct.
Thank you. And so, again, let me just go a little bit further. The chair mentioned that he had either written a letter or maybe even had some conversation from Janet Yellen about the time limits that she had attempted to describe. Is it your understanding that she said she could maneuver and kind of manipulate things so that she paid the bills that were coming due but this could only last until about June. Is that your understanding?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Can she keep us afloat until about June?
I don't, honestly. That's not for me to say. These are really questions for the.
By the way, guys, when you're investing, it's very important that you're able to separate what the facts are from the political arguments that go on, particularly these hearings. Don't get too swayed by it. It's a lot of political
debt and pay bills that were coming due out of another account, etc. Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get
Gentlelady's time is expired. The gentlelady's time is expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee, Mr. Hill of Arkansas.
Thank you, Mr. Chairman, and thank you, Chair Powell, for...
So kick it off, guys. All kick it off over there in Capitol Hill. Go on, you Americans.
Having your views on many topics. Thanks for talking about your commitment to price stability. You know, we've had this discussion last June between us of, I do think that's the primary mission of the Fed, and I think it should be the only priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for, quote, full employment and having that policy environment and making sure that that's right. So your commitment to price stability is welcome by this committee. Yesterday
it's good now. Bitcoin's reaching flat on the day now. That's good.
A regulatory framework, a broadly regulatory framework for digital assets. Is that right?
Yes.
And is it your view that if we had a regulatory framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Absolutely.
And would it, if we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business and tokenized payments, that again, that would be beneficial to business to know how to go about that?
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Right. And then my next point would be exactly that, to help banks, investment brokers, custodians understand how they could even participate in that market in a safe and sound manner. You agree that a regulatory framework would help on that?
Yes.
And then finally, we've grown up in our country, and it's unique in the world, that we have a dual banking system, and due to a quirk here in Congress over 100 years ago, we have insurance is regulated exclusively by the states. So would you believe that regulatory framework would also have to preserve some sort of role subject to safety and soundness, for states to play some role in that regulatory framework for digital assets?
Let me just say, I think that it certainly works in banking and insurance. I have no problem with those.
Right. But you think it could, you consider it possible that it could also work in digital assets?
Certainly possible.
Yeah. Thank you. Turning to a topic that's been a subject here for nearly 4 years, central bank digital currencies. Article 1 of the Constitution reserves coins and coin issuance, money issuance to the Congress. And we've in turn delegated that to the U.S. Treasury, which has, since 1912, engaged the Federal Reserve as their fiscal agent. You've testified here many times before that to issue a central bank digital currency, that would have to be authorized by statute by Congress. Is that still your testimony?
So that is absolutely the case as it relates to a retail CBDC. There are potential forms of a wholesale CBDC that we need to look at. It's less clear. But we've always been talking about retail CBDC, and that's something we would certainly need congressional approval for.
And what would be a parameter on something that's not a retail CBDC where you think that could be issued in some form or fashion without Congress's direct statutory authorization?
It would be, for example, it would just be something between banks, so it would look an awful lot like a bank reserve. And you might ask, well, why would we need it? And that's a really good question, too.
Yeah.
But it's just something that's literally within a wholesale market.
But that speaks that you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside the yeah. Yes. So that leads me to FedNow, which is supposed to be up and running, I think, this summer, somewhat behind the scene there. I would like to ask you to formally have this full committee briefed on that by the Federal Reserve. I know the chair of the Kansas City Bank was involved. She's now left. And I think the committee has a lot of questions about FedNow, how its interoperability will work, how it's going to roll out, and also just a question that we've been asked that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using Venmo. Do you have a thought on that?
I'm not sure why we're not 24/7 on that, and we, of course, be delighted to come up and brief the committee on FedNow.
That'd be good. We'll take you up on that and the right person from the Fed. And Mr. Chairman, I yield back.
Gentleman yields back. We'll now recognize the the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several years ago the importance of tough legacy LIBOR, some $16 trillion of instruments where the creditor wouldn't know how much the debtor was supposed to pay. This committee, we passed legislation over a year before the LIBOR hit the fan. You issued regulations 7 months before the absolute deadline. I hope we do this in other areas, and it's my understanding that with those final regulations, we're done and we've solved the LIBOR issue. Is that correct?
That's my understanding as well.
Good. People talk about inflation, and they somehow say that it's a matter of the personalities and politics in the United States. Others argue that the entire world is hit by inflation because Ukraine and COVID. I think we've got the answer to this question in that inflation is considerably higher in the Eurozone than it is in the United States today. And it's very hard to say that Joe Biden is responsible for inflation in Germany. I commend the ranking member for bringing up the debt limit and the harm that's already done to our economy. If we solve the problem tomorrow, we had less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget plan tomorrow. And perhaps in their time, one of our Republican colleagues can tell us when the Republican budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity, which guarantees high housing costs. Mr. Chair, we've talked back in 2001 and several times even before that about wire fraud. And having just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is, will the buyer of the house be tricked into wiring their down payment to the wrong account? Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. When you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that.
I didn't know you didn't have that in the States, guys. Sorry about that. I thought that's like common sense from like 20 years ago.
There are other ways to do it, and that you'd be happy to get back to me as to how you're going to make sure that an email from a Nigerian prince does not get the wired funds, particularly in a housing transaction, wired to an account number that turns out to be in Lagos. What progress do you have? When can home buyers have a system where they're sending it to a named payee as well as to a number?
So I hope we did come back in a timely way to you on that, but it's a problem you've brought to our attention. You're right, over many years, and we continue to focus on that.
Well, the bureaucrats who are working on this don't want to do what the Brits did. They've proven it can be done. You said you were going to accomplish the same goal in some other way, and it has been a while, and it's not solved, nor are you aware of any solution. I would hope that you would go back and say, we don't want to add this anxiety to every real estate transaction. We go back to the drawing boards, follow what the Brits have done, and have pay matching.
Go back and do your homework properly,
finally,
Jerome
as
Powell.
to crypto, cryptocurrency says what it means. Hidden money. That's what it means. And if we impose know your customer and anti-money laundering statutes to it, it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
Gentleman's time's expired. I will now go to the gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Chairman McHenry, thank you very much. Chairman Powell, thank you for joining us today. We appreciate not only your professionalism, but your direction at us. Chairman Powell, I know that the Fed considers divergences, and you talked about it as you spoke in your opening statement about consumer price index, personal consumer expenditures, inflation, GDP, and all these things are talked about in your report, monetary report, March 3, 2023. Thank you. A couple days ago, I had an opportunity to see that an economist, Arthur Laffer, produced a report that spoke about literally this country doubling GDP. Now, I know we're putting CPI, PCE, inflation, all these things into a mix, but he said that that I have missed, and it's seemingly to a person who follows this, as Art Laffer does for 50 years. What do you think is an important?
Sorry, guys, just saying that TA works. Those that say TA doesn't work, look at this 22,000 level, how it obeys it. Like, it works. Like, learn TA. It definitely helps you. Even if you're not a trader, if you're investing, learn TA. It doesn't cost you a penny, just learn it.
Something like 17 or 18 in that range percent of GDP delivering healthcare. Other similarly wealthy countries spend 10%. So it's the delivery system. It's not that the benefits are incredibly rich or anything like that. It's just that the delivery system is very expensive. That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy, but I'm responding to your. So I would think that he may have meant that if we had a delivery system that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy, which I would agree with.
So you've spoken of supply chain disruptions because it in fact is an inhibitor or an accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this. Is that something you should start paying attention to where policy people, not only at the Fed, but your Fed banks around the country would start looking at and start putting pressure on us to gain those efficiencies as a result of a global view?
So on supply chains generally, they have suddenly been tremendously important in inflation, as you know, for the last couple of years, and for the first time really have been something that we've had to study carefully. In terms of healthcare delivery, that is strictly a question for you and for the parts of the government that are charged with it. The Fed does not have a role to play and does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role in education. You've got a role in who's in the workplace. You've got a role. Interest rates, and yet my point is it's such a staggering number that impacts us. Just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political. It's an inefficiency that is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Gentleman yields back. We'll now recognize the ranking member.
Right, guys, we're going to park that there because so far so good. Powell hasn't said anything to wreck the markets per se. If you want to carry on watching that, CNBC.com actually have the live stream for that, so go check that out. If you struggle to find it, tweet me or something. I'll send you the link to the CNBC website. But look, as long as they don't say anything silly, we should be all right. But the reality is, Jerome Powell really does enter now into a credibility issue. I'm going to make a separate video later on today analyzing everything, including the jobs figures, the new data we've got out from the JOLTS, and the ADP jobs, as well as what's coming. But Jerome Powell, to summarize for you guys, has really put himself in a tricky predicament. If he doesn't now go back up to 50 basis points and take grip of it, he could risk falling more and more behind the curve. If he does do 50 basis points, which is now what the market has gone in and priced in heavily, they flip-flopped heavily, then he also has credibility issues because he was wrong. Nobody's going to believe a word he says. So every time we're going to have this cat and mouse situation where Jerome Powell says something and the market's going to go, no, we're going to do the opposite. We don't trust you. You got it wrong once on the big stage. Why should we trust that you're going to get it right? So he's losing his connection with the market, and that's exactly what happened with Paul Volcker. So we need to be very, very careful. Just quickly, guys, for any of you guys trading, check out BYBIT, Ijaz.UK/BYBIT. Check out the copy trading feature. But more importantly, if you're looking at this on the 5-minute chart, this move is good, right? We bounced from 22, but you've got this resistance sitting here at 22,200. So in the short term, you want to see a move beyond there. For those of you who are playing this on a little bit of a longer time frame, you will want to be looking out for this pattern. Let me just pull this up for you. I will share this later on in my other video as well. But this is the pattern you're looking for. In fact, let's do it on the daily. You guys will see it nicely here. Look at this on the daily. We're in this green channel right here on the daily. But within that green channel, you form this double top pattern with this horizontal neckline. So if you break down this move, what you could be looking at is if we get it wrong, we start seeing some more pain, this could be bringing you to the bottom of the channel, right? Around this level, 19,000, 20,000, around this level. Okay, so that's what I'm looking for. If we lose 22, I'm looking for 20 to keep it nice and simple. All right, guys, thank you for joining me on this live stream. Don't forget to smash up the likes on your way out. Look out for my summary video later on today. I'll do like an 8-minute video on the market and what's going on. Make sure you stay engaged. I'm going to give out this Binance gear as well. TA course, Ijaz.UK/TA, and I'll see you